survey. So pre-pandemic, everyone was like, "This is great, real estate, fine. This is the best place to put your money and invest." Now we go forward to July 29, where we were definitely in the pandemic, in the situation with all the lockdowns. Now they said in the summertime, the survey showed a uniform pessimism and a drop in sentiment for developers all across commercial real estate until 2023. And I know there's things floating out there saying survive to 2025, but this is what's kind of going on. We know even next year, 2021 is going to be a transitional year, and we hope it doesn't go longer than that into 2022, but definitely 2021 is transitional, and most people say you got to survive to 2025, right? Because even up to 2023, we think maybe things will start getting back to normal, which will be about about 8 quarters, where things are just progressing when we get a vaccine or when things start really opening up and we feel our economy is safe again and we can get back to normal. Now, globally, this is what's going on in August 11, 2020. Well, as you know, the global markets, everyone has been feeling the impact of COVID. Right now in England, they're shutting down again. Many of the European countries are doing a second lockdown, a second shutdown. So, it still hasn't been solved, and with these lockdowns, it's definitely hurting the global economy and the overall GDP of the world growth. And if you look, it's 55% decline quarter after quarter for global investment volume. And also, the investment volume has decreased, and this is the first half of 2020. With the Americas, we dropped 37%, the Asia Pacific dropped 32%, and the Europe, Middle East, and Africa went down 13%, from 2019 first half to 2020. I hope to find out, maybe we will discuss again when 2020 is over and we can kind of see what happened in the last half of 2020. But as everyone knows, and this is what I do too, if you're interested in tracking mostly the larger real estate and getting a good idea, is to look at different REITs. But many of the REITs hit their historical low during March of this year. So if you looked at a lot of, especially like Simon Properties, Mace Rich, if you track them, they hit that bottom in March of 2020. But look at almost a little bit above their March lows currently, and you can kind of track that. Now they're having a better sense of what's going on in their malls, especially the closed ones, the closed malls, not the open malls. But now you get a better idea. So I would always suggest for people that are interested is to track REITs from hotel REITs, office REITs, retail, mall REITs. So you get a good idea. It's a good indicator, and they have great research report, on a very macro level view. So very important that you kind of monitor what REITs are doing, and maybe even investing some, right? Because we in commercial real estate, we can kind of feel what's going on before the REITs start reporting it. So we already kind of know what's happening, especially in our markets, and really talking to other people around the country and the world. One other thing is, everyone knows who's syndicating and putting deals together and raising capital. Fundraising was very slow. Everyone was wait and see, definitely during the pandemic. Most of the people I was talking to is, let's get the election over, let's even get 2020 over before we deploy capital. But there is a lot of money sitting on the sidelines. There is an abundance of money waiting to see, or even trying to reach out to the lowball. And I'm sure many of you here had those clients come in and just say, hey, let's just make an offer, see if we can get a deal at this ridiculously low price. But we're just not there yet for lowball prices this year. But I definitely tell people next year, keep your powder dry and keep looking and keeping in contact and getting educated and networking to make sure you're finding these opportunities, because they will happen, I believe, in 2021. And then markets with deep pools of dry powder and transparency provide more resilience. So this is not going to stop some investors from deploying capital in different countries. But if you want to get the money, usually it's the countries with a lot of transparencies, with liquid capital or dry powder that they can find opportunities to deploy their capital. But the transparency is good. It is very important because nowadays they're not traveling to other countries. I know that I had friends in Canada. They said, well, Jim, if you come to Canada or Korea, you're know the security, and that's why we do believe America is going to be a great opportunity for foreign real estate investment into America next year. Obviously, we all know high net worth individuals have emerged as a source of liquidity. We all know family offices, large family groups, not so much the REITs, but the high net worth individuals, they could react quicker, right? They can make their decisions quicker, and you definitely should stay in touch with, if you have them, those type of networks or relationships, because they will be buying and looking for opportunities in America. And I know I have my clients scouring all around America, especially the big cities, watching what's happening on the news reports to be ready to deploy capital when there's an opportunity. So really stay in touch with your network, your high net worth individuals, because they do have money and they do want to deploy. Just need to educate them and stay on top of them. And then also, everyone is looking for, if they are deploying, they are putting in industrial, multifamily, very defensive stocks that are not going to fluctuate too much, and alternative sectors, like you said, the storage, data centers, other things that they know are not going to be impacted so much by COVID. And the debt markets are stabilizing, and we know that the interest rates are really at the all-time low, which is really very supportive of monetary policies and borrowing and lending in different countries. So with the debt market and the certainty that the interest rates are going to stay at these low levels for the unforeseeable future, is really good for commercial real estate. It's good for real estate. It's good for us. One thing I do want to bring up now that this is kind of behind us is the propositions in California. With everything else that's going on, as many of you here know that are in real estate and organized real estate, having Prop 15, 19, and 21, boy, were we, really afraid that if these propositions pass, it would greatly impact the commercial real estate. And we knew with this has been on the ballot for a lot with the Prop 13 trying to bifurcate and change. But I'm so happy that, on Prop 15 it didn't pass. But be vigilant, everyone. They're going to keep on trying. And that's why I think, like my clients, maybe your clients too, are always asking, unfortunately, to move out of California and deploy their capital to other places. But you need to educate your clients on what's going on, because maybe it is time to help them diversify in California around. Because I did tell my San Francisco clients, don't put all your eggs in one basket. And now they're reaching back out and saying, Jim, well, what do we do? And I said, well, let's look at the situation, see what we can do to make it the best situation to redeploy